What is the best Vanguard ETF to buy in 2024? Now that is a question worth pondering. The world of investing can seem like a vast and complex maze, but one of the key elements to successful investing is selecting the right exchange-traded fund, or ETF for short. Vanguard, a titan in the investment industry, offers an array of ETF options. Each of these funds carries its own unique blend of factors for investors to consider. From sector-focused funds to those that offer broad market exposure, the choices are abundant. The right Vanguard ETF for you hinges on several considerations. These include your investment goals, risk tolerance, and time horizon. It's about finding the balance between potential returns and volatility. So, are you ready to navigate the labyrinth of Vanguard ETFs? Stay tuned as we dive deeper into some of the best-performing Vanguard ETFs. Your journey to investment success in 2024 is just beginning. Before we delve into the specifics, it's crucial to understand what an ETF is. ETF stands for Exchange Traded Fund. It's like a mutual fund and a stock had a baby. It offers the diversification of a mutual fund, meaning it spreads your investment across many different stocks or bonds. This reduces your risk, because your investment isn't tied to the success of a single company. But like a stock, an ETF can be bought and sold throughout the day at fluctuating prices. Now, why should you consider investing in ETFs? There are a few benefits. 1, they typically have lower costs than mutual funds. 2, they offer the flexibility of a stock. And 3, they provide an easy way to diversify your portfolio. In essence, by buying a single ETF, you're buying a basket of different investments. Now that we understand what an ETF is, let's examine some of Vanguard's best offerings. First up, we have the Vanguard S&P 500 ETF, also known as VOO. This is a fund that has consistently proven itself as a stalwart in the investment world. If you're looking for a reliable horse to bet on in the race of investments, VOO might just be your stallion. Its performance is closely tied to the S&P 500 index, which includes 500 of the largest U.S. companies. This makes it a splendid choice for those who want broad exposure to the U.S. equity market. Now let's talk performance. Over the past decade, VOO has displayed a steady upward trajectory, mirroring the growth of the S&P 500. It has proven to be a solid performer, with its returns often outpacing many actively managed funds. This is a testament to the power of passive investing and the efficiency of the U.S. stock market. Risk level is another crucial factor to consider. VOO, like any investment, is not without its risks. However, its broad diversification across numerous sectors can help mitigate some of the volatility associated with individual stocks. This makes it a relatively safer option compared to investing in single stocks. One aspect that sets VOO apart is its low expense ratio. Vanguard is renowned for its cost-effective funds, and VOO is no exception. The fund's low fees mean you get to keep more of your returns, which can significantly impact your portfolio's growth over time. Moreover, VOO is highly liquid, meaning it's easy to buy and sell shares without impacting the price too much. This makes it a flexible choice for investors, whether you're looking to hold for the long term or need to make quick adjustments to your portfolio. In essence, the Vanguard S&P 500 ETF gives you broad market exposure, steady performance, and low costs, all wrapped up in one neat package. It's a fund that aims to mimic the performance of a benchmark that has stood the test of time, the S&P 500. VOO provides a simple, cost-effective way to invest in the S&P 500. Next, we have the Vanguard Total Stock Market ETF, or VTI. This ETF is a popular choice among investors, and for good reason. It's known for its broad exposure to the entire U.S. stock market, encompassing small, mid, and large-cap growth and value stocks. This makes it a versatile choice, suitable for those looking to diversify their portfolio across a wide range of sectors and company sizes. VTI's performance has been impressive over the years. It has consistently outpaced many of its peers, offering solid returns for its investors. The fund aims to track the performance of the CRSP US Total Market Index, which represents nearly 100% of the investable US stock market. This is no small feat, and yet VTI manages to do it with an extremely low expense ratio, making it a cost-effective choice for investors seeking broad market exposure. In terms of risk, VTI falls into the medium category. This is because it spreads its investments across a large number of stocks, effectively diluting the risk associated with any single company. This risk level, combined with its solid performance, makes VTI a balanced choice for both conservative and more adventurous investors. Additionally, VTI has a strong record of dividend payments, which can be an attractive feature for income-focused investors. While the yield may not be as high as some other funds, the consistency and reliability of these payments add another layer of appeal to this ETF. VTI also offers a high level of liquidity, with high trading volumes on a daily basis. This means investors can easily buy and sell shares without significantly impacting the price, a crucial factor to consider when choosing an ETF. In summary, VTI's broad market coverage, consistent performance, moderate risk level, and reliable dividend payments make it a highly attractive option for a wide range of investors. Whether you're looking to diversify your holdings, seek steady returns, or generate consistent income, VTI has something to offer. VTI is an excellent choice for those seeking wide-ranging exposure to the US stock market. Now let's look at the Vanguard Dividend Appreciation ETF, known as VIG. This ETF is a standout in the Vanguard lineup, and it's easy to see why. The primary focus of VIG is on companies with a strong and consistent track record of increasing their dividends over time. This ETF is designed to provide investors with a steady income stream, which can be a real game changer, especially in volatile markets. Performance-wise, VIG has a solid history. It boasts a long track record of stability and growth. As of the close of the last fiscal year, the ETF had a 10-year annualized return rate of nearly 7%. This is a testament to its steady performance and its ability to deliver reliable results. Now let's talk about risk. Like any investment, VIG does come with some degree of risk. However, the risk level associated with this ETF is considered moderate. This is largely due to its focus on established companies with a proven history of dividend growth. These companies are typically less volatile and more resilient in the face of market downturns. Additionally, VIG offers a diversified portfolio. It holds shares in hundreds of different companies across numerous sectors. This broad diversification helps to further mitigate risk and provides investors with exposure to a wide range of industries. Another factor that makes VIG appealing is its low expense ratio. Vanguard is known for its low-cost funds, and VIG is no exception. The fund's expense ratio is considerably lower than the industry average, which means more of your money stays invested and working for you. Lastly, VIG is a great choice for those seeking a regular income. The ETF pays out dividends to its shareholders on a quarterly basis, providing a consistent income stream that can be particularly valuable for retirees or those nearing retirement. In conclusion, VIG is a great choice for income-focused investors. It offers a solid performance track record, moderate risk level, and a steady stream of income through dividends. So if you're looking for a reliable income-producing investment, VIG could be just the ticket. So, what is the best Vanguard ETF to buy in 2024? We've journeyed through the vast financial landscape exploring three top contenders: the Vanguard S&P 500 ETF, VOO, the Vanguard Total Stock Market ETF, VTI, and the Vanguard Dividend Appreciation ETF, VIG. Each has its own strengths, and your choice will depend on your individual investment strategy. Let's take a brief look back. The Vanguard S&P 500 ETF, or VOO, is a solid choice for investors seeking exposure to some of the most significant US companies. It's a low-cost way to tap into the performance of the S&P 500 index, which has historically proven to be a robust and reliable benchmark. Next, we delved into the Vanguard Total Stock Market ETF, or VTI. This fund offers a broader scope, including small, mid, and large-cap equity diversified across growth and value styles. It's a one-stop shop for those who want diverse exposure to the entire US equity market. Then there's the Vanguard Dividend Appreciation ETF, or VIG. This fund is designed for investors who value stable income streams. It focuses on companies with a strong track record of growing their dividends year after year. It's a solid choice for those who are after consistent income and long-term growth. But remember, there's no one-size-fits-all answer here. Your choice should reflect your investment goals, risk tolerance, and time horizon. Do you prefer the stability of blue-chip companies, the broad exposure of the total stock market, or the consistent income of dividend-growing firms? These are the questions you should be asking yourself as you consider your options. Investing is a journey, not a sprint. It requires patience, diligence, and a clear understanding of your financial goals. And while we've highlighted some of the best Vanguard ETFs to consider in 2024, the ultimate decision lies in your hands. As always, it's important to do your own research before making any investment decisions. Thanks for watching.